Welcome back to the end of the first week of October. So let's do a quick market review of what's been released in terms of the fundamentals. There are a few things to consider. I think the data is coming up from the US. Overall, it's pretty good, especially with the ISM manufacturing PMI. This is 49, just one more away from that 50 level. It is much higher than what the market's consensus is at 47.8. Huge jump from 47.6. Now, I think this is great, especially for the US. Now, everywhere else, if we take a look at the European numbers, I think manufacturing number does pick up a little bit, but the US jump is so much more significant. And in addition to that, if we take a look at the JOLTS job opening numbers, it comes out at 9.61. That's a huge jump from 8.92, much higher than the consensus of 8.8. Services PMI in the US, we are looking at a slight drop. It's not a significant drop, 54.5 to 53.6. Now, focusing on that, I think if we take a look at one of the shockers this week is actually the ADP NFP number. Now, if we take a look at the ADP NFP number, it is a much bigger drop from 180,000 to 89,000. I'll be honest with you, in terms of ADP, correlation with the actual NFP from the Bureau of Labor Statistics, that's probably very minimal. We don't actually look at ADP as, as a reference point to what the NFP is going to be. A lot of the times we get a very different outlook from the ADP numbers and the actual NFP release. Again, ADP is more of a private company with the payrolls that they have. So it doesn't really encompass the whole, actual data that the BLS in the US actually takes into consideration. So this one here, does it cause a little bit of a movement? Yes. Was it significant enough? Not necessarily. If we take a look at the technicals later on, overall, the market for this week has been pretty flat, with the exception of the Dow Japanese Yen, which we kind of gave out an update on to the Dow Japanese Yen, but I'll talk more about the Dow Japanese Yen later on. All right. So data for the initial jobless claims, this one here, we see a little bit of an improvement, 205,000 to 207, sorry. It is below the consensus of 210,000, so it does come in a little bit better. The 4-week average was actually a little bit better. The number was actually dropping down, and the continuous claims for the year, we are actually off by 1,000. So overall, data does point to a potential for the unemployment rate to be released today to actually fall from 3.8% to 3.7%. Now, the NFP to be expected tonight is actually at 170,000. This one has shifted a lot. At the beginning of the week, we were looking at 163,000, and it was adjusted to 169,000. Right now, at the final standing before the NFP release, we're looking at estimated NFP to be at 170,000. Now, it doesn't mean that if we get 170,000, it's a completely bad thing for the US. It's still a gain. It's just a much smaller gain. And also, we need to consider whether or not there's actually going to be a revision from last month's number, because for the past 2 months, the NFP numbers has been revised down. So this is something that we need to take into consideration going into the NFP today. All right. In regards to the Dow Japanese Yen, let me just bring out the technicals here so we can actually take a look at the Dow Japanese Yen. So let's focus a little bit on the Dow Japanese Yen. We can see the spike that happened a while back on the Dow Japanese Yen, right? We see that significant spike here on the Dow Japanese Yen on Tuesday. Now, I'll just go on to the 10 minutes time frame just to give you a reference point on what really happened here on Tuesday. So that drop happened within the first 1 minute, and that drop, that's pretty significant. However, on the weekly outlook, I did mention the potential for an intervention. If an intervention happened, we would be looking at a much bigger drop to the downside. We will be losing that 147. We are potentially looking at, a 4 yen to 5 yen drop that happened pretty much instantly. So what happened on Tuesday? It was only 281, which is nearly 3 yen, but it didn't actually dip below 147. So it wasn't an intervention. That suspicion was pretty much realized. I posted out a video, a short one, on Wednesday, talking about, it doesn't seem to be an intervention. We have the data yesterday. We've come through the data, and from what we noticed, there was a little bit of a rate checking done by Bank of Japan, and that probably kind of hints to a potential intervention. They haven't intervened yet, but they were checking out the rates, right? So if they were checking out the rates, the thought process would be, yes, they're looking to intervene, and that causes a little bit of a sell-off. The banks were getting that rate checking request, and they just assume, all right, there's going to be an intervention. That's one part of the story. The other part of the story is that a lot of traders that have been holding on to the dollar yen position for their carry trades, they were targeting a return towards 150. So once that level was breached, it triggers a lot of profit taking, and that contributes to the 10 minutes crash on the dollar Japanese yen. But you can see what happens here after the crash happened. Market does pick up immediately, back up above 148.50, and for now we are actually still hovering above 148.50. I can show you the daily time frame here on the dollar Japanese yen, and we are still looking at a positioning above 148.50 for the dollar Japanese yen. So we actually haven't closed below 148.50. This level still holds, and right now we're looking at that as a key support level for the dollar Japanese yen. Okay, so that's a little bit on the dollar Japanese yen. There wasn't an intervention. The intervention didn't happen. Market was just a little bit spooked. There's some profit taking that happens. Rate checking done by the bank, prompts traders to kind of just let go of their dollar yen position. And that is basically what causes that drop. But immediately, once it dropped down below 147.50, a lot of traders were picking it back up at 147.50 and 148. As a disclaimer, I was one of the traders. I actually picked it up back at 147.50 and 148. And the purpose is we are still anticipating a potential return towards 150 one more time. Basically, what the market wants to do is just maintain it around 150 so that the intervention didn't happen, and we can just basically trade within that range at this point in time. Okay, so that's the dollar Japanese yen. Let's move on to the Aussie USD. Aussie USD was at a critical junction yesterday because at 63.50, if the market didn't come back up above 63.50 yesterday, it would potentially cause a little bit more of a sell-off. But for now, it managed to retrace back above 63.50. Current projection for further corrections, we are looking at a potential return to the weekly pivot located at around 61.8%, which is very close to 64 cents 25 area for the Aussie USD. So retracement is still ongoing right now for the Aussie USD. Potential return towards 64.25. Price has stabilized. We are back within that range now, 63.50 to 65 cents. Obviously awaiting NFP results, which is going to create a lot of market movement. And the Euro USD, very similar situation. Does picked up back above 1.05, and if we take a look at it from the weekly, it's a very sharp bounce from the 1.05 level. Right now, intraday wise, we're looking at a little bit of resistance coming in at 1.0550, but ultimately a potential return towards the weekly pivot at 1.0575. We'll see what happens here, but we are a little bit off from that low at 1.05. Likewise with the pound USD. We bounced off a little bit from 1.21, so I can show you the weekly time frame. The weekly, you can see the rejection for this week. It bounces off very significantly, 1.205. I think the lowest point was about 1.2030, but 1.205, 1.21, we saw a stronger bounce off those support levels. So we are off lows at this point in time. I think right now market has a little bit of resistance at 1.22. But once, intraday wise, price progress beyond 1.22, then we're potentially looking for a potential return towards 1.23. But intraday traders need to be careful at 1.22 because that could still form as an intraday resistance. So we might see a little bit of a price rejection at 1.22. If we overcome 1.22, then the next level that we're looking for in terms of a much deeper pullback would be at 1.23. All right. Just to wrap things up, let's talk a little bit about gold. This one here, we were looking at a return to 1820. We got that. So price basically just dropped down to 1820. Right now, this is finding a little bit of a support at around 1820. This is the weekly support one. And for now, with gold, we anticipate a little bit more of price just hovering around the 1820 at this point in time. Let me just hide the pivot so we can see it. So yeah, price is finding a little bit of floor around 1820, attempting to progress higher at this point in time, but obviously still capped by the Ichimoku cloud. But if we're looking just basing it on price, we're potentially looking at about 1830 as the immediate resistance. And I think a break above 1830 would probably initiate that pullback higher towards 1850. But until that happens, we're still going to be looking at 1830 intraday wise as a key resistance for gold. All right, so hopefully you guys are prepared for the NFP today. Obviously, there's going to be a lot of volatility. Market has been pretty much in a range-bound market condition throughout the week. So we do anticipate a little bit of a breakout to happen post-NFP, and the NFP numbers, obviously, the focus would be whether or not there's a revision onto the previous month's number, and unemployment rate is also important, if whether or not we see a drop from 3.8% to 3.7%, or does it stay at 3.8%. With that, good luck to your trades. I'll see you guys on Monday.